Hi, everyone. Welcome to our Flair and Compare Club webinar today about health insurance. My name is Kate Browne. I'm the head of research and media at Compare Club. Compare Club, if you don't know us, we are a financial marketplace. We help Australians make better decisions around expensive services like energy, life insurance, and health insurance, which is why I'm here today. I will ask to join me Harry Gobber, who's the head of strategy at Flair, who's going to be our host today.
Hi, welcome. Lovely to see you all on the call. And it's a fairly overcast afternoon here in Sydney, where I am. Are you in Sydney too, Kate?
I am, Harry. It's freezing and it's
Yes,
raining. And
it really
my
is. I
dog
hope.
keeps looking at me like it's my fault that it's raining because he wants to go outside, but I don't control it.
Well, I hope that for those on the call, the weather might be slightly better. I'm head of strategy as well as general counsel at Flair, and have worked with Flair over the past several years in building the platform. It's a very exciting business. We help about half of the Australian workforce access their pay and benefits each year, particularly as people start jobs. And we help engage people in some of the critical products, both financial and non-financial, that people really should be thinking about when it comes to setting up their pay, setting up their kind of household expenses, and evaluating the key things that they spend money on from day to day. And what better time to do that than starting a new job when you've got access to potentially exclusive offers from your employer in respect of health insurance and a variety of other products. But it's health insurance that we're here to talk about today. And we're talking about what the hidden costs are of not evaluating your health insurance situation. We'll talk a bit about private healthcare in Australia and what it means and why you need to think about it. Issues around what you should be thinking about as a consumer of healthcare. Debunking some common myths about the healthcare system in Australia. We'll talk a bit about the structure of Medicare and the sorts of levels of cover that you should be thinking about getting depending on what stage of life you're in and what your individual circumstances are. And we'll talk a bit about the benefits of the sorts of private health policies that are available through your employee benefits platform, Flair, and our partner, Compare Club. And then we'll take some questions from the crowd, which I think sounds like a pretty good plan. A bit about Flair first. So I think everyone on the call would be a user of the Flair platform. Flair would be the platform that is powering your employer's employee benefits solution. We're a company that's owned by MYOB, which is the largest business management platform in Australia. We serve over 1 million employees on our platform every year. And we have a terrific team of over 100 people across Sydney, Melbourne, and elsewhere in Australia who are able to assist you with accessing your pay and benefits. We have advanced benefits and onboarding solutions, including the Flair app, which I hope you've all downloaded and are using, and the benefits website, which you're able to access on desktop and on mobile. And those are the portals that you're able to use as employees of your company in order to access the sorts of discounts, perks, offers that your employer makes available to you exclusively through the Flair platform. And why do we do it? Well, we try and make pay and benefits fair for every worker in Australia who has access to our platform. We are a platform that's distributed for free across hundreds of thousands of businesses across Australia. And fundamentally, we believe that Australians should have the ability to access great deals on all of the sorts of products that they use, no matter who they work for or the size of the company they work for. And so we're a platform that is available across an enormous number of small and medium-sized businesses through the MYOB platform and over 35 other partners who we integrate with as a platform. On our next slide, we're going to talk about some of the key issues and trends in relation to health insurance specifically. And we've been really pleased to have partnered with Compare Club over the last couple of years to help Flair users evaluate and select health insurance policies and understand a bit more about health insurance as a product vertical. So Kate, what are the big issues that you're seeing around how people are using health insurance or not using health insurance, as the case may be?
Yeah, thanks, Harry. First of all, I'd love to thank everyone for coming along because I'm going to put my hand up and say health insurance is very boring. So thank you for engaging. It's diabolically confusing. I'm not going to lie and pretend it's really exciting, but there's some really key things that can really help save you money and stop you getting tangled up in a whole lot of confusing, bureaucracy, and hopefully just make you, be able to make some better choices. I know when I reviewed my health insurance when I started at Compare Club, I sort of got a little dopamine hit because I realized I sorted it out. I knew I was saving money. So thank you for bearing with us. But first up, yeah, look, it's a diabolically complicated product. As a result, Australians are wasting $167 million each year on junk health insurance policies. And we know 18% of Australians feel anxious about paying their health insurance. It's not a cheap product. 14% of Australians have changed providers to find a better deal. We'd love to see that at like 100% because honestly, comparing and switching is the best way to save money and get value. And almost 20% of Australians have reduced their level of service, or 6%, 7% have cancelled their health insurance altogether. We understand we're in a cost of living crisis, but what we probably want to frame is where this can provide more value and look at products that can bring you that value without making you feel financially crippled. So they're some of the biggest trends we're seeing at the moment in the research we do. The other thing that happened last year is private health insurance premiums went up. They had not gone up for a couple of years because of COVID. We weren't going to the doctor. We weren't having operations. We were still paying our premiums, so they were put on hold. They went up on an average of 3% last year, but that is the average. We saw funds jack their premiums up by 5, 6, 7%. And this was adding on average $121 to people's premiums. Doesn't sound like a lot, but with everything else ratcheting up cost-wise, and if you're thinking there were premiums that jumped quite a lot more than that, that's a big hit on your baseline when we know wages aren't increasing, everything is costing more. Let's throw to the next slide. So junk basic policies. Junk insurance is kind of a funny term. What it means is health insurance policies that are being sold, they're perfectly legal, but they provide very, very little value. We did some analysis this year, and junk policies are generally ones that are called basic. You'll see them on health insurers' websites. Often they're suggested because they're very, very low cost. And they will help you offset some tax implications depending on how much you earn, or if you turn 31 and you start to be penalized for not taking out health insurance. But what we found is some of these policies barely cover you for anything. They may not even cover you for a ride in an ambulance. And then we compared other policies at what they call a basic plus or a bronze cover, which sounds more expensive, covered like up to 60 extra things and cost less than those basic policies, which just seems crazy. But this is a really good lesson in what happens if you don't shop around. So junk insurance, be really wary of that. We often say, be really wary of buying off the shelf because health insurance is so complicated. It's so easy to go on and go, well, this one is the cheapest, per year. I'll take that out. It can be a false economy in terms of getting any cover. Actually could be quite literally a false economy that someone else could be paying $30 less a month and have more cover than you. Another issue is waiting periods. So we've heard about waiting periods. Back in the good old days, I was still alive in 2007. You couldn't change health insurers without having to reserve your waiting period. So that could be a year before you could get any benefit. That was changed because it was seen to be anti-competitive. So you can move now. If you have the same cover and you swap to another provider with the same cover, you don't have to reserve those waiting periods, and you often get a much better deal. We talked about people feeling anxious about paying health insurance, but again, it doesn't add up, because what we do see is so many people not reviewing their private health cover. I'm going to put my hand up. When I moved to Compare Club, I thought I'd had my current health cover for about 5 years. When they looked at it, it had actually been 12 years. And I have a theory, like, time flies with things you don't like doing. I swear every time I'm at the dentist, I'm like, I was just here the other day, and it's like, it's been a year. Private health cover is the same. So my question to you guys is, how often do you review your private health cover? If you want to jot that down, we'd be really keen. We even have technology. You don't need to jot it down. Pop it in the quiz. Be really keen. No judgment too. I've just shared my my own secret shame.
Yeah, I remember when Flair first brought Compare Club onto our platform. That was when I last reviewed my
Mm,
private health insurance cover, and I think I ended up saving maybe 20, $30 a week as a result
amazing.
of different policies. So it adds up.
It really
And
does.
yeah, and the other thing that's quite interesting to review is the sort of regulatory settings that essentially require you to have private health cover, or you start paying penalties, right? Which I think are both income and age based.
Correct. Yeah. Yeah, there's a real carrot and stick methodology by the government. So once you start earning over $97,000 as an individual, you will be penalized with this additional surcharge on your tax. Often that surcharge is going to be about the cost of a bronze policy anyway. So the logic is you may as well just pay for that and enjoy the benefits. The lifetime health loading is, you often see ads about turning 30 or 31, and you think, oh, am I going to explode? Like, what's going to happen? What it means is, for every year after that age, you'll be penalized by a couple of percent points on what you're going to pay when you finally take out private health insurance. And that doesn't reset until 10 years. So again, it's that carrot and stick. It's like, look, if you take it out, you're not going to get penalized. I must say, however, like, we have Medicare. It's there for a reason. It is very good, but it is very, very stretched, and it has become more so over the years. And being in the public system, is amazing. But really, there are some big limitations with that, which I can touch on in a moment. We can flip to the next slide, please, Ree. So these are some myths. They go in both directions. And just, I noticed on the poll, we had a real split. We have some people that don't have health insurance. Some people are reviewing every year. Very good. Some saying 2 to 3 years. That's pretty much on the money. If you can do it every 2 to 3 years, you will very likely be able to save money. The other thing, Harry, I when mine was reviewed, I saved maybe $5 a month, and I was a bit like, yeah. I doubled the value on my extras. Turned out I was on a really old extras policy that hadn't kept up with inflation. So whilst I didn't save money, I'm getting like double back at the dentist. I've got kids with tricky teeth. We all wear glasses. So for me, value is just as important as saving money. So yeah, this first myth, no out-of-pocket expenses. When you do use your private health insurance, you're still going to have to fork out, but it will be, there will be a copayment. But what it means is your insurer is covering a lot of it, not all of it. I think we've all seen too much American TV where everything's paid for. Not that that is a perfect system. We'll always have out-of-pocket expenses. So that's something to take into account. The Medicare system is completely free, but often when we look at that, you could ask the question, why would you want to be out of pocket? The difference is often coming down to waiting periods. I recently had to have my gallbladder out, which was revolting. I felt revolting, and I wanted it out as soon as possible. I went private. I had the surgery within 3 weeks and immediately felt better. The wait time in the public system for that operation is 18 months, potentially, in a city like Sydney. 18 months of feeling like rubbish, 18 months of waiting, getting bumped off lists. Now, my payment for that was $1,500 for the surgery and a $500 excess. So definitely not free. But when I got the bill, the surgery alone was $8,000. And to stay in the private hospital I stayed in would have probably been like $1,000 too. So that's how those payments work. You are still paying, but it really helps you circumnavigate those waiting times. Myth number 2 is Medicare covers ambulance costs. Depends what state you live in. So those of us in New South Wales, Victoria, Western Australia, and the rest, it costs money to call an ambulance, and it can cost $400 or $500. Medicare does not cover it. Lucky people in Queensland and Tasmania are, but in other states, you're going to pay that bill yourself unless you have private healthcare. Again, we always hope no one's going to have to call an ambulance. We had to call one this year for our daughter, and I was actually really shocked when I got the bill. It was close to $500. We were able to claim it. It was super easy, but it really kind of hit me in the face. This is not a cheap ride up the road. So that's myth number 2. If we can flip to the third. This is a bit of a zany one. So there's a lot of policies out there that are sold for couples. Analysis we've done has shown that couples policies are not always cheaper than 2 single policies. Health insurance is based on a community rating, so insurers can't charge differently for the same policy. So an example is my colleague. His wife has a lot of complex health issues. He has almost none. Lucky him. They have completely separate policies because she needs higher cover. She needs a lot of physio for her extras. She needs better hospital cover. He's much happier to have a really standard one. So that is much cheaper than both of them being on that high one. So that's one to watch out for. And if we can move to the next slide here. Yes. For anyone that's thinking about starting a family, you do need to serve a waiting period of 12 months before receiving pregnancy benefits. So, takes 9 months to cook a baby, but often people are planning before that. So this is something that's really good to lock in. Again, the public system is very good. I've had 2 children. I had one in the public system, one in the private. The public system was great until things went wrong. And again, it wasn't about the care, it was about the waiting period. So again, this is something you want to think about. You will be out of pocket if you go private, but it's going to give you a lot of benefits. So again, just think about that if you are thinking about trying to start a family. And our next myth. Okay, so this is the Medicare Levy Surcharge, not a catchy name. This is a tax you get once you start over. Oh, that says 90. My apologies. It's now, as of now, 97,000. This is the penalty you'll pay if you don't take out hospital cover. Extras they don't care about, but hospital cover. And this is where we were saying, you're going to get taxed. A lot of health policies, reasonably good ones, but not those junk ones, will offset that charge roughly anyway. So again, the government is really trying to push you into doing it. So this is another time when people start going, oh, okay, this is when I need to take out health insurance. And as I was saying before, a lot of people make the mistake of just going and having a look online and just choosing the cheapest cover. Yes, that will offset that tax, but you're going to get very little bang for your buck if you actually need any decent healthcare.
It's also only policies that satisfy that requirement. If you can't get an extras only policy, for example.
That's right. Yeah. You have to have the hospital. Just another thing that people don't realize too is your hospital cover and your extras are separate. So you can just have hospital cover. You could, I wouldn't necessarily recommend, you could quite literally have hospital cover with one health insurer and extras with another. Extras, really, I wouldn't say it provides the value that the hospital cover does. It's really like a way of ensuring a discount. So if you're a heavy user of like optical, I use a lot of physio, it definitely takes the edge off. But with extras, you do have to be pretty good at using it and also checking on how you do that. So we have another question, which is how confident are you that your current health insurance, if you have it, is covering all your needs? With the caveat, you might need a crystal ball because you never know what's going to happen. But in general,
it is a very interesting question. The tax matter is one that I've thought a lot about, and of course, before making any financial decisions, you should consult a tax advisor or a licensed financial planner. But it really can essentially offset the cost of a policy to a very great extent.
Yeah. And Harry, that's such a good point. A lot of people, the first time that health insurance conversation comes up, particularly for younger people who are pretty fit and well, often it's your tax agent or your accountant that's going to raise the health insurance issue. So that is that, that's often the jumping off point. So you may have the tax implications on your mind, but I would say, here we go. So somewhat confident, not sure, I need to review my policy. I'm very confident. Well done to the very confident person. It's a very complex area. Really good answers. What I would say and what I've learned on my journey, sort of learning a lot about health insurance, is I personally think it's unreasonable to expect every consumer out there to know all the ins and outs. We're all very busy in our lives. It's very complex. That's where leaning on an expert can be super handy. And that's where obviously, I work for Compare Club, but our health insurance experts, they've got a range of health insurers. They can very quickly find something that will be suitable for you. Sure, you could get every health insurer in the land, set up your own spreadsheets, run your own comparison, go for your life. I used to work at Choice, where we provided all that information, and some people love doing that. Most people are really happy just to be on something that's good enough. It's much better than being on a not very good policy or not having one. So I would say that it's good to understand it, but I'm always wary when people say you need to educate yourself about it, because this stuff is really complex. So really leaning in, a good hack is to talk to an expert. Okay, we'll get to the benefits of private health. Can flip to the next. Okay, so I touched on this before, like Medicare isn't enough. There are a lot of healthcare expenses that aren't covered under Medicare. My dad used to like to say, isn't it wild that everything's covered except our teeth and our eyes? Because, we don't need those, obviously. Dental is a huge one. Dental is so expensive. We have done some research recently. We've seen a lot of people using buy now, pay later to pay for their medical bills, which is completely understandable. It is beyond a lot of people's budgets. And even for those of us lucky enough to be earning a wage, it will still have you quaking in your boots. Having two sort of teenage kids, one who needs braces, it's scary. So that's where private health insurance can come into play. The other one I touched on before is waiting times in the public health system. They since COVID, waiting times have blown out. They were already bad. If you're admitted into hospital and you're having a heart attack, your life is in immediate danger, the public system will be fine. They will prioritize you and you'll go through. Where the rubber really hits the road is the example I gave you, like with the gallbladder. I felt terrible, but I wasn't going to die. We have people waiting for knee replacements, hip replacements, knee reconstructions, people with chronic issues that are always going to get bumped down that waiting list. And again, that is where private health insurance not only gives you the speed, it also gives you the empowerment to be able to choose like where you want to go, who you want to see. So they're two of the really, really big reasons why it's super useful. So the benefits, these are the two benefits between private and Medicare. So have a look there yourself. So, Medicare doesn't cover non-essential surgeries, and you'd be surprised what they don't consider essential. Access to public hospital bed on a ward. We have very overcrowded wards. I unfortunately ended up in a public hospital 2 years ago. I kid you not, they'd run out of pillows, which was just really sad to see the state of our public healthcare system. And this is in Sydney. So, these are very stretched institutions, long wait times. You don't get to choose your practitioner. And you are going to have things that you're going to have to pay for outright. You may have to pay the Medicare Levy Surcharge if you earn over 97,000, and you're going to have that lifetime health cover that kicks in from age 30. Private health cover covers elective surgery. You can go to a private hospital, far greater reduced wait times on elective surgeries. You can choose your doctor or surgeon. You still get rebates for non-Medicare funded care, like your ambulance, dental, optical, physio. You're exempt from that levy surcharge, and you're exempt from that lifetime health cover as well. So they're just some of the kind of key benefits. So when you're comparing policies, these are some really good questions to ask. How much will you get back in benefits on your extras? I love asking people, if you have extras, how much have you used this year? How much have you got left? Thanks to technology, like I have an app now and I can actually go in and see how much I used. I can honestly say before I was in this role and before apps, I wouldn't have had a clue. I would just keep using it until the physio was like, you've run out. Extras are only going to work for you if you work them. Make sure you use them, make sure you get your eyes done, make sure you go and have a checkup if you need to at the dentist before your extras click over. Get rid of the things you don't need, you're not using. Be really ruthless. The other thing when you're comparing policies is, will you have to serve new waiting periods before you can claim back on your policy? If you move to a policy where you've changed your type of cover, there might be some waiting periods. What I've observed recently is that there's a lot of competition for business out there at the moment. So a lot of health funds are actually waiving those waiting periods, even if they normally would add them. So great question to ask. Finally, there's a policy stuff full of items that you'll never claim on. We have done some research. We have a huge amount of very elderly people on gold policies. Gold sounds like it's the best, right? But gold, the difference between gold and silver is IVF. So you're probably not going to be having IVF if you're 60. It's on weight loss surgery. Again, that may not be something that's in your world. Very sadly, mental health cover, psychiatric cover in private hospitals only kicks in on a gold policy. But often a silver policy is going to be more than adequate, or a bronze policy is going to be more than adequate. It depends on where you're at in your life and what your health's like. And again, talking to an expert, they can talk about where you're at the moment and where you're going to be in the next few years. And then again, be really ruthless about editing out the things that you don't need. Okay. So the Flair partnership with Compare Club can provide you with really personalized policy options, which may be suitable for you. We have a whole range of panel partners, so these are some of them. Something that's really interesting to know is there's about 31 insurers in Australia, private health insurers. But when you look at market share, there really is a handful that service most Australians, and we have most of them on our panel, plus a few extra. The difference between them all in terms of what you get is fairly similar in terms of, choice of practitioners. The difference is in a couple of things. One, how competitive the market is. And at the moment, you guys, if you haven't changed your health insurance recently, you are, you're in for a treat. There's a lot of competition. We're seeing people offer 6 months for free, $200 credit, a whole lot of bells and whistles to switch. If you're new to health insurance, people really want your business as well. Again, I know I keep banging on about this. We have other comparison sites out there that let you do self-service, as do the insurers. But I would say Compare Club works over the phone. I'm like, ugh, I don't want to talk to anyone on the phone anymore. I'd much rather message and not engage. I really changed my own opinion on doing that and making that phone call when I spoke to one of our experts, because he was able to really quickly ask me some questions about my family, where we live, our health needs, what we thought was happening in the future. In 25 minutes, he was able to find a new policy for me, walk me through what was available, walk me through the savings, walk me through the value, and do all the paperwork. All I had to do was provide my credit card number so I could do a direct debit. And literally, that's all I had to do. So all the exchanges were handled for me. For me, I'm a parent, I work full time, we're all busy. I might have looked at policies and even found a policy that could have been suitable and then gone, oh yeah, I'll get around to doing that, and then go off and do something else and it doesn't get done. It happens to all of us all the time. This is literally a beginning to end service. And it's probably one of the easiest things I've done and one of the best value things I've done for 20 minutes. So this is a really worthwhile thing to do. The other really refreshing thing about our guys at Compare Club, if you're already on a really good policy, they will tell you that. They will say, we don't have anything that would be better than that. And they'd encourage you to check in a year. So in terms of optimizing your health cover for maximum benefit, compare the market. You want to use Compare Club, they'll do that for you. All the customers we see have saved an average of $300 when they've compared and switched health cover, and we've seen people save a lot more than that. If I said to you, would you like $300 for a 20-minute phone call? Most people would probably say yes. There's also offers. So I just touched on that. Our experts are across all the offers in the market, and that is constantly shifting. There is so much competition in market for your dollars, and often you could find an identical policy. Nothing's going to change except you're going to pay less. And the right cover for you, that is such a generic term. You hear it on ads. People say it all the time. What does it actually mean? So for example, I didn't change my health cover for 12 years. When I took out that health cover, I had two very, very young children. I had a husband and we had fairly low health needs. None of us needed glasses back then. Fast forward to 12 years later, I'm now divorced from my partner. We co-parent our daughters. Those little children are now teenagers that need braces. As I've got older, I need glasses. Life changes and your needs changes. So when you hear find cover that's right for you, that's really what we're talking about. And again, our experts will want to project forward. There's a lot of emphasis on things like pregnancy. One of our experts said to me once, no one ever looks at like I don't know who's got little kids on this call, but little kids are always falling over, knocking their teeth out, having accidents, breaking their arms. He's like, that's so different to the baby stage. And then so different to, say, the teenage stage. And as we all get older, the focus might go from, those very basic things like accidents to things like, depressingly a knee replacement. And just on the complexity of this, we see a huge amount of people come through that have got their own cover and they're telling us they need a knee replacement. And when we go in and look at their cover, they have signed up for a cover that is a knee reconstruction. Now, I did not know they were different things, but they are completely different things. So we've had people buy knee reconstruction. That's the kind of thing that happens if you might go surfing or skiing and completely trash your knee when you're young. Completely different to a knee replacement, which is something that happens to people as they get older and they have arthritis. So that's how easy it is to make a mistake. With the best of will, it's really easy to make those mistakes. And again, I said, I'm very realistic. I would never say you all need to educate yourself. I think top line, and that's what we're sharing today, they're the things you need to know. And at that point, you really can hand it over to an expert who's going to do all the heavy lifting for you. Next slide, please. We're at question time. I don't know if we've just, I don't know, we have, I feel like that was just like 5 minutes, but we've actually been talking for a while. I guess questions, but Harry, do you have any questions or anything you want to raise? I've been doing a lot of the talking. So
I'm happy to kick things off. How should I proceed from here? What should I do if I want to compare the markets and just evaluate whether I've got the right level of health cover?
Yeah, I would first work out who's in your world, who's in your family. Is it just you? Do you have kids? Do you have a partner? That would be the first piece. Look at everyone within your world that you want to be assessed, and just have a think about where they're at. If they have any specific health needs, if they need glasses, if they have tricky teeth, or might need braces. That's probably about the best. Check how much you're earning. So if you're an individual, it's 97. If you're a couple, it is that tax surcharge is calculated at a couple level. I cannot remember off the top of my head. It's around 130 something. So again, do that sort of due diligence before you do that, and have a think about it. Like I mentioned, the couple I know where one has really high needs and one has very low, things like that are really worth mentioning or thinking about. But also our experts can draw that out for you and really highlight where you might be able to make some savings. If you've got a current policy, maybe check in with it and just see what kind of extras you've got. Most of them have really good apps now. You can see really easily what level of cover you have. So you may remember there's lots of golds and silvers and bronzes and basics. The government brought that in to make things simple and with the best of intent. What happened then is we're getting bronze and bronze plus and silver plus and all these little incremental differences. So they're really important to know. If you ask me offline or maybe on this call, I don't think it actually really helped in the end because there's so much nuance there. But check what policy you're on now and which insurer you're with. We've had people that tell us they literally don't know what insurer they're with. If that's you, no judgment. If you call our experts, they can probably get it out of you by asking some questions around, what that policy looks like. There's no silly questions.
And there's a great little wizard in the Flare app that takes 2 minutes to fill out. So you can pop onto the Flare app and it'll just be on the front page. You can click into health insurance and fill out your details, and you'll get a call straight back, I think, from the Compare Club agents if you need it. So that's really helpful. We had a couple of Q&A questions. One of them is, what is the LHC? What is the lifetime health cover measure?
Lifetime health cover kicks in from when you turn 30. And what that is once you turn 30, nothing's going to happen. But if you take out health insurance after 30, each year that you leave it, you're going to pay a little bit more in your premium. So it's a kind of a benign punishment to encourage people to join. So if you join before you're 30, you won't get hit at all. If you join when you're 35, you're going to be paying a little bit more than someone that joined before they're 30. Not a heap, but each year is going to make a bit of a difference. So what we say is get in before you turn 30, or, even, if it's 1 year late, but ideally before you turn 30, take out a really, low cost policy, because once you're in the system, you're not going to get penalized. And again, an expert can really help you get something that's probably not one of those junk policies, as I mentioned before, but something that's quite affordable. And again, it can just be hospital cover. It doesn't have to be extras. So that's what that is, and that's how it's calculated. If you ever go in and play with a health insurance calculator, we'll actually ask you how old you are and ask you if you've had private health insurance before. And if you say no, it just goes and a new price pops up. So that's where it's calculating that.
We have a couple of questions on corporate discounts. People who might have had a corporate discount applied in the past and have kept the same policy in the hope that it will be cheaper than whatever is in market. That's not necessarily the case, is it? Particularly as if you're on the back book, even if you've got a corporate discount, those premiums do increase each year.
Yeah, I would say get it reviewed anyway. As I said, our guys are terrific. If you're on a great policy, they will say, stay on that policy, don't change. I do a lot of media in this job, and I talk to lots of the camera crews that come over, and a couple of them mentioned this to me the other day. So I'm glad you raised it. They said, oh, we're on really old policies through one of the TV networks. And they said, oh, we've heard don't change it because the new ones are really bad. Look, that could be the case, but what I've certainly noticed, particularly with extras, your extras are generally calculated on a dollar value. So what was really good value 15 years ago in terms of a dollar value against your dental will not be keeping up with inflation. So for example, my old health policy, I might get $250 back from a dental visit. And 12 years ago, that was pretty competitive. 2024, a dental visit is that much more expensive, but I am still getting that dollar figure off. It's not, it's not moving. It's not a percentage. Some policies do run on a percentage, but very rarely. So again, you'd want to just double check. There are some grandfathered policies that might actually be terrific, but there's a very good chance they're grandfathered policies that are completely out of date. So it's not going to hurt to check.
Indy and Michelle have asked similar questions which relate to the lifetime health loading. What if you're over 30 and you've already incurred that cost? What can you do to try and reduce it or have it eliminated?
Once you've had private health cover for 10 years, it resets. So again, an extra incentive to keep with it, keep competitive, keep on a level of cover that isn't costing you a fortune if you don't need it. And once you've done the 10 years, it will reset to zero. So that's more carrot than stick, that one. Yeah.
And we also just had a comment come in about the Medicare levy. It's up to 1.5%, isn't it, of your income? I think the couples threshold is 194, from
Yes,
what I've
it
seen on
is.
the
Yes.
website, and
Yeah.
97%. So it adds up pretty quick.
Yeah.
That could be quite a large burden.
Mm.
One attendee asked if you haven't paid for a couple of months due to technical issues, or potentially if you forgot about it, or if you've passed that threshold and a couple of months has passed. What should you do? Because I assume you can't kind of backdate your cover, but I suppose the best thing you could do would be to just make sure that you get cover as soon as you can, right?
Yeah, I'd get cover as soon as you can. If it's around the tax implication, that is a bit of a tax question I can't answer. I'm not sure how it's calculated. I can't imagine you'd be penalized for the whole year. You'd probably want to move ASAP to take it out as soon as possible, and yeah, have a chat with your tax agent or your accountant about that, and see. I don't know if they could reverse it, but certainly, to me, it would not make sense to be slugged for the entire year. But I'm not a tax specialist.
Yeah, it is very complicated.
Mm,
And we do of course recommend that you speak to a licensed tax professional if you have any questions about the health stuff in relation to tax in particular. So
mm.
Singh has asked, Blonde's policies normally work with a percentage-based cover. Is that good or bad? Is a sort of 50% coverage for bills good or bad?
I think a percentage cover rather than a dollar cover is great because it will move with inflation and it will move with prices. When I've talked to some of our experts in-house, they've said they're seeing more insurers moving to this model, and they think it's just a much more efficient way of doing that. So have a look out for those. It means that if you don't get to reviewing and comparing every year, which is so easy not to do, you'll know at least that's going to keep up rather than get stuck on those solid dollar figures.
Yeah. We've had another attendee ask, do you by chance help with fur baby health covers too? Perhaps inspired by that cat in your video.
I'm so glad you asked. We are not doing fur baby insurance at the moment, but we are looking to introduce it in the next year. And I'll tell you a few. I don't have a cover. She's too old. And she's a rescue. I will, for all the pet fans. I also have another audience member on the chair. Um, the joys of working at home. I've been really hoping they don't crash, but my cat loves video calls. I don't know what it is. Pet insurance is becoming so important. I've worked in other companies where we do have it, mainly because again, inflation. So vet bills are astronomical now. Part of that is to do with inflation. Part of that is to do with the advances made in technology. So vets feel duty bound to offer you the latest care, where maybe 20 years ago they might want to put that animal to sleep. They're now like, do you want to do an MRI? Do you want to do a reconstruction? And generally, my thoughts on pet insurance is, if you don't have access to a large pool of cash when an emergency happens, then pet insurance can be a really good idea. It's by no means perfect. If perhaps you had a mortgage with a large offset on it, maybe you wouldn't want to take a pet insurance option, but it can be hugely useful. Australians are like some of the biggest pet owners in the world apparently now, especially post-COVID. My dog was an accidental COVID purchase. And so, yeah, and we treat them like members of our family. So I'd definitely check it out. We don't do it at the moment, but definitely look into it if you don't have it.
Makes sense. Hey, it's been terrific to chat to you. I feel like I've learned a lot in this last half hour, and I'm sure all of our participants have as well. Now, I think everybody who's on this call is going to receive some communications about how you can take next steps to have your cover reviewed by Compare Club. A review of your cover by Compare Club through Flair is absolutely free, which is always another question that popped in through the Q&A. And it's something
Absolutely.
that we
Yeah.
highly recommend that you take advantage of. And of course, there are also opportunities for exclusive discounts through the Flair network. That there are a number of discounts that pop up from time to time, including cash incentives and policy percentage-based discounts that are available through Compare Club exclusively via Flair. So definitely check it out. It's an exciting opportunity. And thank you so much to everybody for joining us today. And thanks, Kate. It's been terrific to chat with you.
Guys.